Kabir Ahmed, Chief Financial Officer, that is CFO of Tata Communication, joins us now. Kabir, good morning. Thank you for joining us. It's the first time I'm interacting with you, at least on this forum. So nice to have you. I mean, I've had the pleasure of tracking Tatacom for many years now, and I've seen the company migrate. So let's bring our viewers up to speed with what's happening. I mean, data versus voice. That's how markets have always looked at your company. What is happening to the data business? What is happening to the voice business? And how do you see growth moving for both these verticals?
Good morning, Nikuj. Thanks for having me and great to interact. We've always said our strategic focus is data. Voice is a declining business. We decline lower than the market, so we try to hold there and we manage that business for profitability. I'd rather focus the discussion today all on data because that's our strategic focus. We announced last year that our intention and our ambition is to double our data business from 14,000 crores to 28,000 crores. And I'm delighted that after having kickstarted this business, as you rightly started in the introduction in the pandemic, where we were, before that growing at single digits, our first marker was to get this data business growing at double digits. After about 4-5 quarters of consecutive double-digit growth, we then stuck our neck out and said we need to have larger and bigger ambition, and our ambition is to double the data business in the medium term. And I think we are well on course for that.
Okay. Are you on that curve where the benefits of debt reduction and data growth will kick in? Because there was volatility in your FY23 numbers. First 2 quarters of FY24 were stable, but has that curve started where benefits of debt reduction and data operating leverage will kick in?
Well, I would say currently the margin profile of what we have is just a weighted average mathematics, Nikunj, of the acquisitions which were loss-making businesses that we've acquired. And our trajectory is definitely to take them to the destination profitable, margin target. As we progress there, I think we will get back to our guidance of 23 to 25 for the company as a whole that we have given for EBITDA, and we will get there. The 3 KPIs which had, in fact, I would say, performed outside the top end of the range that we had given, margin, ROCE, and debt to EBITDA. All 3 of them were diluted as the result of these acquisitions. The first one that will get back will be debt to EBITDA. We get down to 1.3x. I've always stated that my ambition, sans any strategic acquisition that we may do, is to operate under 2x. After the Color acquisition, we would be at 2.2x. Next year, hopefully, we will get back under 2x. ROCE will probably follow, their own. Maybe it will take a year longer, and EBITDA will take even a year longer. But all three KPIs will come back to their guidance range or ambition range, if I may, surely in the next couple of years.
Kabir, so if specifically I want to talk about, the recent announcement that you've made that you're going to move the new-edged digital services to a different unit. Tell me a little bit more about this. Why this move? Which are the businesses that you're going to induct in this? And separately, would you list this particular business at some point in time?
Good question. As we actually unveiled our ambition to double this data business, there are 2 elements to the data business. I have core connectivity, which is largely my network business. That is growing in low to mid single digits. In fact, the market globally is declining. In India, it is growing. And we would like to be a market leader, position, maintain that in India. We would like to be a credible challenger in international markets. But sum total of that is still going to be low to single digits. And that, before the Color acquisition, we were about 64% of our portfolio. After the Color acquisition, that's become about 55% of our portfolio and 45% data, digital portfolio, which is the second part, of the business is. So you can do the maths. If we want to double the business and a significant portion, bigger than half of the business when we announced, is growing in single digits, then the digital portfolio needs to grow significantly, higher, north of 20-25%, every year. Now, obviously, it's not going to be every year or every quarter because there will be lumpiness depending on the nascent businesses that we actually have within that. So the whole idea of the management was, let's try and provide focus, provide agility, to this business, because that now needs to leapfrog into the terrain of growing at 25 to 30%, kind of thing. So the whole idea was, let's carve that element of the business. So the core networking part, the core connectivity part, is what will probably stay with the parent, and the new age digital portfolio is what we intend to take it to the new entity.
When you say your data business will double in 4 years, I'm assuming this is organic growth, right? There is no acquisition included in this.
No, Nikunj, it does include acquisition, but when we announced also, we said we don't know how much. Because I think it's irresponsible to put a number on acquisition, then you'll be chasing, that number in order to meet that target, and may do stupid and foolish stuff. So we did say that it will come as a combination of organic and inorganic, but there is no target that is taken on inorganic, which means that I don't have any assets. Then I'm committed, obviously, to deliver that organically, as well. But if there are assets out there, and we will be naive to think they aren't, because in the business of digital that you are in, you would find enough pockets of excellence, lovely assets spread all over the world. We are a global organization, and we today have the strength of the balance sheet to be able to go and reach out, to these assets and see the synergistic and strategic value that they bring. Switch is a great such example, which we even acquired even before announcing the doubling of data business. Kalera is another great example. We were on the track with Digo. Kalera gives us the speed to market by about 18 to 24 months already with their capabilities, the K.io that they actually have. So all of this makes imminent sense for us. So I would say it is a combination of both organic and inorganic.
Preempted my next question since you did mention Switch. You also talked about as to how the losses in Switch have been narrowing, right? Has the unit now turned profitable? And on a sequential basis, do you see losses on the lower side?
Yeah. I mean, this unit is getting profitable, Aisha, if I may. And next year, we should see them definitely getting into the black. But I mean, I'm more actually enthused and inspired by the joint sprints that we are doing, the ability for us to actually go together as Tatacom and Switch to the whole array of media customers that we have. The capability that Switch brings, not just in video transmission, which is obviously augmented by our global network that we have, but also, I would say, in video production, capabilities that they have in the US. And that's definitely an asset that we can replicate, across the world as well. So I'm quite positive about what Switch can bring to our portfolio.
Combined margins for both Switch and Kalera were around 3.7%. Correct me if I'm wrong. And any improvement over these levels that you expect?
Look, Kalera, in fact, as we announced, the very first quarter of integration, we turned that business EBITDA positive. They were an EBITDA negative. They're a listed company, so the numbers are out in the public domain. And we turned them, EBITDA positive in the very first quarter. The cost synergies have kicked in, pretty much straight away. So when we were doing the due diligence, and as the board was approving, this asset, and after we announced our intention, we did have time for close. And during that time, the teams at both sides, I think, worked quite hard to identify all those low-hanging, wins that we could actually get, which is what I'm quite proud of the team, that we have achieved that and we have delivered that in the very first quarter. Now, going forward, I would say the focus for both Switch and Kalera, I would say, is top-line growth, all the revenue synergies that we have identified, and more is something which we will focus on Switch and Kalera.
Let me simplify it for our viewers, right? Tata TCS is a bet on IT services. Tata Elxsi is a bet on engineering. What is Tatacom? I mean, what is Tatacom a bet on, if somebody really wants to understand it in simple terms?
Yeah, I think a great question. This is something which I go and educate a lot of investors, Nikunj. And we want to reposition ourselves from being a telecom to a comtech play. And pardon me if I don't want to be sounding like a lecturer, in this forum. In a digital transformation journey of an enterprise, there are easily about 10 to 12 players that come together in order to offer that solution to any customer. And therefore, there is going to be an overlap. There is going to be an overlap of people doing little more than and then what they would want to do, and that's the aspiration of of every incumbent person. What is our our foot in the door? Our foot in the door is still going to be led by connectivity. So we are a masters of connectivity. Today, let's talk about a large automotive manufacturer. They are basically saying, look, I want a 24/7 connected car. No, obviously, TCS and LXC are both respectable organizations. They can bring, certain elements, to that. Like, one brings the software, another one brings the, design expertise. But where Tatacom, for example, in that comparison, has an edge, is that Tatacom today understands the connectivity layer, which means that if car goes through a terrain where there is no Wi-Fi or there is no mobile connectivity, then can it switch automatically to a Leo or a Mio or a Geo, a satellite connectivity, so that the user experience inside the car does not suffer at all. It's almost like a shock absorber, right? That irrespective of whatever the connectivity, volatility it might have in terms of its availability, can my software today adapt to all of those things and provide that same seamless experience. Plus, the power of global network. Today, a car can be manufactured in an assembly line in Germany, but when it's sold to a customer in Turkey or in Korea, and when you turn on that car, it is born connected, burning the local profile of that particular country, and that is the capability Tatacom, actually brings to the table. So, therefore, I would say it is the vantage point of where you actually enter into the organization and what is the need of the customer. Put the customer first. And there are deals in which TCS is best placed to lead it and Tatacom follows. And there are deals in which Tatacom is best placed to lead and others follow. I think we are mature about it to put the customer first and do what is right for the customer.
For contracts with TCS and other Tata group of companies, have you reached that collaboration?
I think so, very well. I would say in the last few years, we've done a great amount of progress working with the Tata Group in totality.
Very basic question. IT companies have one hallmark. They do buybacks and they don't have debt. You don't do buybacks and you have a debt. Why is that?
Yeah. It's very simple. Look, my CapEx is my oxygen. End of the day, I am led by infrastructure. So whether it is undersea cables that I'll continue to invest in, whether when I even do a deal with with a customer, I just need to put a small router at their premises so that I can actually land the connectivity in. Or if it's an IoT application where I'm buying sensors, let's talk about the deal which is there in the public domain. The Medina Development Authority, where we have converted that entire city into a smart city through our smart lighting solutions. So all those sensors that are required in each of those street lamps, I am offering a service, and the cost of those capex is of course amortized over the tenure of the contract, and we charge a certain price as a service because it is bundled with hardware plus software plus a services layer and entire thing wrapped around, so that we offer a totalistic service to our customers. So capex is going to be continuing to be part of it, and as long as I have capital, then Nikunj, it's a question of what is the right debt equity mix. Today, under 2x for the current shape of the business that I have gives me an optimal WACC, and therefore I'm all about maximizing value to my shareholders. So I'm not hung on whether should I have zero debt or should I be fully leveraged. We will do what is actually sensible to have a very, very agile and efficient balance sheet. I think we have achieved that in the last 3 years, and we're going to build that on further. And if I need to take more, debt, subject to the capability within my balance sheet in order to fund my ambitions, we will do so. In fact, we were at $200 million of capital. We said we will increase to 300. We will be 300 this year. And with more investments coming in, I think it will only, take our capex bill higher and higher. But that's also makes us a lot more nimble and agile to respond to market needs.
Thing I missed on record. When did you say that you're going to list this new unit?
I did say we will list, Aisha.
Okay.
But at the moment, let's try and provide focus, to this entity. Let's bring in digital or agility into this entity so that it can capture, its aspirations. What we do with it is, later on, I think it's too premature. It's just a baby that's born. It's just going to start its operation from the 1st of April. So we will probably cross the bridge of value creation at an appropriate time.
Clock back and I'll take the clock forward. Final question. Last 3 years, Tata Communication has done the following. They've reduced debt, they've taken the data business up, they've acquired assets, and they've plugged in the strategic gaps. Next 3 years, can I say that after consolidation and after balance sheet management, now Tatacom is actually in high growth mode?
Yes, that's our aspiration. We want to continue to be in high growth mode. And Nikunj, my larger, ambition is slightly different. If you are in the digital and in the technology space, you have no clue of what's coming up next. Now that is for my great in my GMC who are techies who understand the market and do that. My job, as a CFO, is to prepare the company to be ready to take on any such challenges that come our way. Do we have the balance sheet strength? Do we have the P&L resilience to be able to acquire these opportunities? Can we invest? Can we be prepared to fail and fail fast and fall forward? I think these are all, I would say, the cultural traits that we need in this organization. If we fix on these ingredients and we continue to, I would say, support these ingredients in the right way, I think, growth is therefore a consequence. I think it's not about just, blindly going in for growth without fixing in the basics. We have fixed the basics in the last 3 years. That's evident in our numbers and in our, whatever we announce to the market. I'm not really worried about short-term, movements of 50 basis points here or 100 basis points there. That really doesn't take away the strategic direction that Tata Communications is in. We want to double our business, data business, and that's, in the next 3-4 years. And if we see the market, evolving faster, then we will, adapt to that evolving needs even more faster.
3 to 4 years, is it 3 or 4? And 3 and 4 is 3.5. So 3, 3.5, 4. 3 hai.
Yeah, 3 to 4 is fine.
Okay. Kabir, you should come down next time to our offices and we'd love for you to turn lecturer and give us an insight to Team ET now on how things work in your business.
No, I would love to do that. I'd love to do that. Sure.
Okay, great. We'll count you and take you up on that. Good chatting with you today. Thank you for taking the time out.
Thank you.